I just wrapped up recording with JayB, co-founder and CEO of MilkyWay. So MilkyWay started off as the leading liquid staking provider for Celestia. And yeah, they now expanded to not just liquid staking for Celestia, but also liquid staking for other chains, and then even getting into restaking, right? Restaking and data availability from Celestia, both being part of that central modularity narrative. And yeah, we have to touch on liquid staking, restaking, Celestia, and where modularity is right now, how it's being adopted, what maybe users aren't seeing that developers and teams at some of these big chains, some of these protocols are able to do in their operations. Yeah, it's a good one. Hey, I'm here with JayB, co-founder and CEO of MilkyWay, right? So it's been a while. We've covered, Celestia in the past, obviously, that whole ecosystem. We covered MilkyWay in the past, specifically. So now, yeah, we'll be catching up with JayB, see what's going on with the modularity narrative in 2025. And yeah, let's get into it. So JayB, you want to just give me like a quick overview, high-level overview, 2-minute brief background on yourself?
Yeah, sure. Thanks for having me, Daniel. Hey, everyone. I'm JayB, one of the co-founders of MilkyWay. I am really excited to be here today. And yeah, so a little bit about me. I come from an engineering background, and I have been a software engineer for over a decade. So prior to joining crypto, I did web and mobile development. And I first got into crypto back in 2017. And honestly, I've been stuck here ever since, being part of crypto communities, a lot of learning, building, and just fully immersing myself in the space. So throughout my professional career, I've worn a lot of hats. I've been a CTO at a blockchain company. I've been a lead blockchain engineer and a security auditor, and now I'm taking various roles in the company. So most of my time has been spent in the Cosmos and Ethereum ecosystems, working on different layers of development. So yeah, that's a quick intro about me, and I'm excited to dive into today's discussion.
Okay, fantastic. And by the way, do you have any thoughts on the Cosmos ecosystem? It's not something that we have covered for a little while. So, but you mentioned, you have a lot of experience in that ecosystem. What do you think's going on there right now? Is there, yeah, how do you see the Cosmos ecosystem right now?
So the way I see Cosmos ecosystem is I really love the tech and I really love the vision, which is the Internet of Blockchains, because that's how I fell into the red pill of becoming a part of, community member and a contributor. And because, Internet of Blockchains just makes sense to me. It really clicked. And, how they're solving this, how they are realizing this vision is through strong tech stacks. There's a Tendermint core consensus, which is very cool. It guarantees single slot finality, and there's a Cosmos SDK framework that allows developers to build a blockchain very easily, and it's very modular, and everything is broken down into modules. You can just plug in and out. And, if you want to use governance, you can just plug in governance module. If you want to have a feature for sending, your tokens, and you can just plug in your bank module. And, it's really cool, tech stack to have. And I know there's a lot of criticism and people don't really, when they see consider Cosmos ecosystem, tech is cool, but we don't see a lot of TVL users and etc. But problems are being solved. I think the solutions are there, and the foundation had a massive shift, and the most intelligent folks that I've worked with in the ecosystem, like this guys from Skip Protocol has taken an important roles at the foundation to I guess address the problems in the Cosmos ecosystem. So I'm very much looking forward to what's going to happen over the next years.
Yeah, that's great. Just to touch up on the Cosmos ecosystem. I mean, it's just not like, yeah, it's just not something that we often cover. I mean, yeah, you're right. There's definitely like instrumental like, from the tech POV, right? Even if people don't realize it, like, yeah, I mean, obviously back in the day, you had like Terra, even BNB chain, like these very high profile chains, yeah, built on that stack, and then now you're seeing like the Internet of blockchains, like you're really seeing that come out, like like seeing blockchains like different nations, like in an economic block, that kind of thing. So you're seeing that narrative really play out, even if it's not like necessarily all using the tech stack, maybe using some other stuff. But yeah, so that's great. So why don't we steer things back to MilkyWay and like, yeah, just give a very high level overview of what MilkyWay is, like what you guys are building, and yeah, maybe even like the origins of how it came to be.
Sure. So Milky Way is the first and the largest liquid staking and restaking protocol in the modular ecosystem. As for how we started, me and my co-founders go way back. So we were old colleagues at Tendermint, the company that laid the foundation for Cosmos back in 2021. While we were there, we were exposed to various emerging projects back then, and Celestia blockchain was one of them. So I was a senior core engineer, contributing to Tendermint, Cosmos SDK, IBC protocol, and I was assigned to build like various different Cosmos SDK modules. So fast forward like 2023, I heard that Celestia mainnet was launching soon, and I found liquid staking opportunity after chatting with like old friends in the Cosmos ecosystem. So as I was designing the technical architecture, I basically ping my old colleagues, which are now like co-founders and some other founding team members. So like, hey, do you want to hop on a call? I really need you guys. Let's build this thing together. Let me kind of walk you through what I'm, trying to build here. And there's a massive opportunity for, with this like Milky Way thing. So, they decided to join, and we went all in. In just 2 months, we launched our liquid staking product in December 2023. So that's basically how we started. And ever since then, we raised 5 million seed round backed by Polychain, Binance Labs, Hack VC, and other top institutional and angel investors. And now we're pushing further, expanding liquid staking to more bullish layer ones in the ecosystem. And we're building restaking for the modular ecosystem. And yeah, and I think you asked like, as for the, what's the Milky Way's importance to the Celestia ecosystem? And like liquid staking, I think nowadays is a no-brainer in like staking landscape. Like traditionally in proof of stake blockchains, staking locks up your tokens in protocol, and you earn staking rewards, but your assets are not liquid, right? That means you can't use them anywhere else until you unstake and go through a waiting period, like known as the unbonding period. And in the case of like Celestia blockchain, it has 21 days of waiting period if you want to unstake. So it's a very, very long time to wait from a user's perspective. So especially in a volatile markets like this, right? So with Milky Way's liquid staking, stakers can maintain their assets liquid while earning staking rewards.
Pair Protocol is the first and only trading platform for narrative trading. Their technology unlocks the ability for anyone to pair trade. For example, if you think ETH will outperform Cardano, you can long ETH ADA in one click with leverage. Or perhaps you think Pepe will continue to outperform Doge. You can long Pepe Doge. Again, all in one transaction. The combinations are endless. Learn more at beta.pair.garden.
Yeah, that's great. Yeah, I think it's important to underline like the liquid staking side of things, like how important it is, right? It's not. It's like a minimum expectation now, right? Like in the past couple of years, you know, you have so many, not in like just Celestia, but obviously all over, like all over the place, all over the chains. Yeah, it really is like, and then beyond liquid staking, you have like restaking, you have like yield, like stripped yield, right? Fixed yield. You have that stuff with Pendle. So yeah, like there's a lot of optionality, and yeah, it is definitely like a core primitive for any chain these
Definitely.
days.
Every other
Um,
ecosystem has its major liquid staking protocol. And nowadays, from a crypto natives perspective, it's a no-brainer. It's like, why do we stake? We just, yeah, use liquid staking, and then, you know, you receive a liquid staking token, and then utilize that across DeFi protocols to maximize your, yield opportunities.
yeah, exactly. So I think it's good that it's become like an expectation. Then you have core players like on each chain that can provide that service for users, provide like a good first touch point, and then make like the liquid staking token the default like way to actually hold the and allocate to the native token. So talking about native tokens, so let's go back to Celestia. Like what made you and the team like so convicted in Celestia? Because obviously like your protocol is like it originally it was focused on like the TIA token specifically. So like what was your vision on Celestia as a protocol? And yeah, like kind of at the start there, really like intertwining yourself and the success of the protocol like with Celestia. And obviously Celestia has, you know, gained a lot of traction since its start.
Yeah, sure. Yeah, that's a great question. I guess this is about why we believe in modularity. So yeah, let me break it down. So why modular? So like, let me give you a simple example. Like, imagine walking into a massive, like all-in-one mega store that sells groceries, meat, raw fish, like sneakers, laptops, or whatever, like car parts, all under one roof. It sounds very convenient if you're, looking to buy any like multiple items at once. But in reality, it's a total mess because each section has its own specialized needs, and customers complain about the smell of the raw fish. The grocery department needs more storage, and the electronics section, needs better security and so on. So the store owner, I imagine like it's gonna be stuck juggling conflicting demands, and no single part of the store is truly like optimized. So and now, like, compare that to going to a butcher for fresh meat, and a sneaker store for shoes, and like high-end tech shop for gadgets. You exactly get what you want, and with better quality, more specialization, and greater efficiency, because each store is designed for its specific purpose. So I guess that's a great, analogy, like the example that I provide to folks who are debating about like the monolithic versus like modular blockchains. And yeah, that's how, so we've been like confident in modularity from the start because we truly believe that it is the future of blockchain's architecture. And like I intro myself in the beginning, I've been, contributor, like a long contributor in the Cosmos ecosystem, which has always championed, interoperability and the vision of internet of blockchains. And like the modular approach takes this vision even further. Like instead of one blockchain trying to do everything, like modular blockchains specialize in specific functions and they optimize for them. So to me and our team, this is the most like logical way to solve blockchain scalability and efficiency. So that's why we align with modularity from day one, and why we're building in this space.
Yeah, that's great. I mean, it definitely makes sense. Not too long ago, we had Connor from Enzo on the pod, and yeah, Enzo's like obviously focused on like blockchain shortcuts, like sort of like trying to break into that area and prevent like developers and teams from having to juggle all these things that they're maybe not best suited to juggle. It's like, yeah, maybe they should focus on what separates their protocol from the rest, and not like and pass on some of these like responsibilities to like another provider some way. So it's definitely good. Yeah, I think it's good for the developer ecosystem. So let's touch on like Celestia right now, right? So Celestia first came. That was like a real like early innings of the bull run thing, right? The Celestia came like late 2023, and that was like a key narrative early 2024. So can you touch on like Celestia and modularity today in 2025, and like how would you say things have changed over the course of like around like 1.5 years?
Yeah, sure. So like you said, the modular narrative really started picking up steam in late 2023. That's when the Celestia mainnet launched. But this wasn't an overnight thing, and from my perspective, because they've been building towards this like since 2019, putting in years of work to bring modular blockchain design to life. Because I think there's a great presentation that's given by Mustafa, the co-founder and CEO of Celestia. He laid out the vision of like future blockchain and why the modularity makes sense and how he's planning to achieve that vision. And like a lot of the projects, all the layer ones are trying to do the same thing, just a bit faster with the bit modifications. But like the design that he came up with is like breakthrough, and like it kind of, for some people it doesn't make sense, but people who are in the ecosystem have a strong belief that this may address all the scalability and scalability problem that has been a big issue for the past years. And now in 2025, and modularity isn't just a concept. I think it's just happening. And we're seeing real progress, more rollups, chains, and more bigger block producing chains. And like multiple ecosystems use Celestia's data availability layer. And not to mention that the modular tech stacks are maturing over time, and it's making it easier for developers to build it in a more efficient, cost-effective, and scalable way. So over time, I expect modular stacks to become even cheaper, more optimized, and tailored to different use cases, whether it's a DeFi protocol, game, AI, and deepin projects and all that. So don't get me wrong though, like there's still a lot of work to do. But the point that I'm trying to make here is like the solutions are already known and they're being actively worked on, not just by the Celestia team, but by some of the smartest teams across the entire modular ecosystem.
Right. Yeah, I think it's good to highlight the actual like adoption of the protocol itself from developers, teams at these big chains that are actually using employing modularity in their stack. And because you mentioned like it's not an overnight thing. The token was more like an overnight thing, right? Which is like a lot of people thought of like, oh, the TIA token. And then as over the course of 2024, right, it's like not as important. People's attention shifts to other like new shiny tokens and whatnot. But there's actual like adoption of the underlying technology and the protocol. That's like right. The technical unlock like for team is not as sexy as like the green chart or whatever. Okay, but so that's great to understand how Celestia is like it has achieved significant adoption over the course of its life cycle so far. So how is liquid staking and even like the advent of restaking, how has that changed, right? Because that's the other side of the Milky Way protocol is the actual liquid staking side of things. So how has that changed? Because Eigenlayer first came around around a similar time as Celestia actually, right? Like late 2023, I think, when deposits first opened for Eigenlayer. So how has like the liquid staking and restaking landscape changed? Like what is Milky Way's POV and how have you guys like adapted to that landscape?
Yeah, absolutely. Yeah, by the way, like time flies by, like, 2023, it feels like a long time ago. But it's only like, a little more than a year ago. Yeah, so to go back to your question, I guess the liquid staking game has definitely evolved over the cycle. When we first launched, we took the first mover advantage in Celestia's ecosystem. And luckily, as it was getting a lot of traction, we also got a lot of traction. So the TVL grew to over 55 million in the first month, I think. And now there are like multiple liquid staking protocols out there, like Draw Protocol, Strike Protocol, and etc. And as you mentioned, EigenLayer was launched their deposit at the end of 2023, if I remember correctly as well. So that's when we started discussing internally whether is this similar to like liquid staking? What is it about? What like how it is designed, how it works basically, and is this kind of the new like concept or that we can kind of build for the modular ecosystem? Is there anyone building it in the modular? And because we were thinking about, we were discussing whether we wanted to expand more, like, to support liquid staking on other blockchains, or do we want to build like something new that's kind of correlated with liquid staking? So we decided to take some time to kind of research and think from the first principles, is this the way that's the best design? And what are some of the needs that we can kind of solve in this restaking design? So we saw an opportunity for restaking as no one was building for the modular. And we fast forward, we developed over like 7 months or so, and we launched our deposit vault last Q4, and making it the first restaking solution for the modular ecosystem. And from there, we allow more asset types other than TIA, and liquid staking tokens of TIA. We allow USDC, right? And now we're looking beyond just modular native assets. We're exploring to bring yield-bearing stablecoins, other blue chip assets in the ecosystem, and of course, like Ethereum and ETH and BTC and many other assets in the crypto industry. Because at the end of the day, we want to allow our services to have an option to choose the level of security for themselves.
Right. Yeah. I mean, having optionality for the users, I think is so important. In this like in this day and age, like yeah, not like forcing your users to like be allocated to just like ecosystem assets. So okay, a lot to touch on. First, you mentioned like the team was kind of mulling like, oh, should we start developing something in restaking or maybe explore something new in liquid staking? Like, what are you guys thinking about and considering like in regards to that other option of like building something more new in the liquid staking space before you eventually decided to like roll out more options in regards to restaking?
Mm-hmm. So when it comes to providing liquid staking, in our design, it's very like flexible, and we came up with our own unique design. It's different from like liquid staking smart contract design in Ethereum or Solana ecosystem. We fully leverage the Cosmos tech stacks to reduce the overhead of like operations from a builder's perspective, and it's very easy to support other blockchains. And yeah, it's a novel way of like providing liquid staking support. And in the modular ecosystems, there are a lot of blockchains. Nowadays we see like Asia blockchain is going to be launching soon, and Babylon blockchain is launching soon, and there's mitosis blockchain, and yeah, some other blockchains like are emerging constantly. And we our design is basically very flexible to support those blockchains, and each blockchain has its own unique I would say like features, and sometimes we need to make modifications to our design. And but like at the end of the day, we our liquid staking is, I guess, flexible to support those blockchains. And yeah, what was the question? I guess I kind of forgot as I answered this.
No, no, no. That about answers it. Yeah, I was just wondering as to like what was the team's thought process like between mulling, diving into the restaking side of things or weighing other options. So yeah, that makes sense. Um,
Mhm.
yeah, I mean
Okay.
these days you have a lot of
We
that.
still answering your question. Sorry, I completely forgot as I was answering. Like to kind of answer that question, we actually took a lot of time discussing internally, because we need the home base. Like Celestia blockchain has this unique characteristic. It it's only specialized for providing data availability to rollups and other chains. It has execution environment for themselves, but it's not for other builders to build smart contracts on top of their base layer. So if you see like Ethereum, Solana, or like Aptos, Sui, like they all have execution environment on their base layer. So they attract builders to build applications on top. But Celestia base layer does not, support that. So that's why we came up with our own unique design of providing liquid staking service. So our tech component is actually deployed and operated on a blockchain called Osmosis, which is the prime, which is this is the primary DEX that's mostly used in the Cosmos ecosystem. So our design is quite unique. So because of the Celestia unique characteristic, we have deployed and operated on Osmosis blockchain. And in order for us to scale to support other blockchains, should we continue building our stacks on Osmosis, or should we just build our own home base, which is to build our own chain that's built by Cosmos SDK, or do we want to become a rollup that's more aligned with like Celestia? So like we had a lot of discussions internally, but from a user's perspective, like this isn't something that they care, right? That's what we realized. As long as the liquid staking, is provided in the most secure way possible, like the only thing they want to do is like they liquid stake and then receive liquid staking token to maximize their capital efficiency. So we were kind of exploring, and then now we have made a decision to build our own chain, and then for restaking. But for liquid staking, let's continue with our current design, but like bring this design onto each ecosystem so that every ecosystem wants liquid staking protocol on their own ecosystem. That's what we also observe. One of the observations that we have made. So each ecosystem wants to have liquid staking on their ecosystem. They don't want like liquid staking token to be breezed over to other ecosystem and floating around. They want liquid staking token to be just floating around in their own ecosystem. So why don't we just make it in a way that we just deploy our liquid staking component on their chain, on their ecosystem, and then just play around with it. But later on, we just find our own home base to orchestrate all these different liquid staking services on other ecosystems, and do some like innovative stuff in the modular ecosystem. And I think that's the beauty of like being modular.
Yeah, I think it's great that you like recognize when when the modularity and like independence side of things makes sense and like when it doesn't, right? I think like the biggest like criticism of Cosmos, right, is like pursuing like the independence of chains and at the expense of the users sometimes. So yeah, I think that's really interesting that you opted for that like two-pronged approach. Keep what's working like as is. Don't like mess with it too much and like maybe alienate users or make them have to change their practices, and then also pursue something like that can keep more the value like in-house as time goes on. So yeah, that's really interesting. So why don't you like quickly expand on how the Milky Way protocol has evolved? Because originally, I remember covering Milky Way early on actually, and like you guys were like the first LST provider, in for Celestia, and then you had like the other protocols like announcing their own liquid staking thing and their incentives. I remember that it was like a competition in those days. So you also opted to get into like the restaking side of things. Now you're adding assets, or you have, and you're planning to add more assets that are completely distinct. So why don't you like dive into the new offerings like right beyond liquid staking for Celestia?
So restaking is basically separate product line that we're building, how to say. But although they solve different core problems, because liquid staking unlocks staking position and making users' assets liquid.
Vertex is a lightning-fast order book DEX offering spot, perpetuals, and money markets with unified cross-margin and a vertically integrated product suite. With Vertex Edge, users can tap into the power of shared cross-chain order book liquidity across Arbitrum, Blast, and Mantle, while earning trading rewards in VRTX, ARB, and MNT. Traders can access over 50 spot and perpetual markets alongside the GMCI 30 and meme indices, with low-fee trading and capital efficiency, all while preserving self-custody and on-chain settlement. Learn more at vertexprotocol.com.
But restaking solves a different problem. It essentially solves a shared security problem. So it arises from a question of how can we allow crypto economic security to other, chains, services, basically off-chain programs mostly, that are not secure by the base layer. But from a user's perspective, if you think about it, they're quite the same because it increases capital efficiency. You put your assets to work, for generating more yields, right? So I already explained about the liquid staking part, but moving on to like the restaking part, it basically adds another layer on top, like letting users earn more, rewards from securing additional services. And what I mean by services is very broad, but mostly like off-chain programs, whether they are bridges, oracles, RPC, servers. If you think about like AI projects, like the AI models, like who's training those AI models, right? All those like bot programs, but they're certainly not, secured by, they require additional validation per se. So like this is where restaking comes in and provides security to those like, services. I think it's good to give an example here. Let's say there's an AI model that generates like the critical medical reports per se. But like, here's the problem. How do we ensure its outputs are accurate and not manipulated? We need a system that verifies AI generated results and punishes bad actors who try to introduce false, data. And normally, setting up a decentralized validation network for this would require a full-blown validator set, which is very not cost-effective, slow, expensive, and it's a massive headache. But if they can simply plug in and out of security from restaking protocol, they can actually address the problem of like additional verification. Because what restaking does is very simple. It incentivizes for those who behave well, and it disincentivizes for those who misbehave. So in the case of like the AI, in the example of like the AI that I just provided, like it basically verifies AI generated results to be accurate and not manipulated. So as for from a builder's perspective, they don't need to attract and maintain a dedicated validator set for themselves. It requires a lot of coordination, continuous coordination, and just they can just plug in restake assets and come up with their custom additional validation, and they receive security instantly. So it's a lower cost for them. It's a faster deployment for them, and I think this is the power of restaking. Not only the AI generated, but like all these different use cases out there that require its own validation mechanism.
Right. So you mentioned an important distinction between the actual like the users of a protocol like MilkyWay, right? What are they doing? They're trying to earn some yield. So now they can earn more, right? And you also dove into like what the high level approach of like what builders like of all sorts of protocols can unlock, right, with restaking. So how have you for both users? I mean, I guess our audience would be more, definitely much more familiar with like the restaking, like how offerings for users have changed. So, but for users and then as well as builders, like how are you seeing adoption of restaking playing out? Like, so how has this played out over the course of like the past year or so? And then how do you think like adoption of restaking is going to continue to play out, right, over the next months, over the course of 2025, and even beyond, like in the near future?
Yeah, so like I said in the beginning, I think it's not a concept anymore. The modularity, it's really happening, and I'm seeing real progress. There are more use cases coming up. Big block producing chains in multiple ecosystems have integrated to use like Celestia VA layer to post data, and modular tech stacks are getting mature. It's making developers to build in a more efficient, cost-effective, and scalable way. So over time, I expect more builders to come in and just play around and come up with an innovative idea to build, whether they're new DeFi protocols, gaming protocols, AI protocols, and like you name it. Like all these like breakthrough apps will emerge as the base layer is as the tech stacks getting mature, and in it's certainly going to take quite some time, but I don't see any like active developers or teams even are leading the space because they're just huge believer in the modularity, and they continuously discuss around what are some of the solutions to solve this problem and that problem and etc. So in terms of adoption, I think it's a matter of time.
Right. Yeah. I mean, time, it's like a necessary ingredient. But yeah, in crypto, it always seems like things like 1 year seems like like 5 or even more. So yeah, people tend like they make their conclusions after just like a few months. Okay, so right now, like in the crypto, like stepping back from the very like specific pocket of like liquid staking and restaking and modularity, like yeah, the crypto market's kind of like the prices are down over the past couple months. But one of the narratives that's continued to catch on is like institutional adoption, right? You have like easing, easing regulatory standards, like more favorable towards crypto. That's more of like a U.S. Specific thing, right? But it like a lot of investors are in the U.S. and it trickles down to just the crypto ecosystem as a whole. And yeah, like especially with like the Ethereum ETFs, like people are always talking about staking, like, oh, the institutions want like they want staking into ETFs. Like that was the big unlock. So do you think like is there a possibility that institutions could get involved with like liquid staking, restaking, like not necessarily for Celestia specifically, but just more in general? Like, do you think there's room for actual like tangible growth there, or is this more of like a retail thing when it comes to the people actually like backing the security, like putting their capital up front, and ultimately earning yield, right?
Yeah, absolutely. Yeah, that's a great question. And I would be surprised, if institutions, are, flowing, they invest their capital in these like liquid staking and restaking sectors. I think some of them already are doing it. And I think it's good to mention that, the Trump, has won the election and then became president of the United States. And he's a pro crypto president, right? And then he even like minted his own meme coin for it. So he has designated a lot of people who are pro crypto, and I think the institutions are taking that opportunity to take an advantage of it. And at the end of the day, if you think about it, who doesn't like maximizing their yields? If you have your capital, and you want to put them to work, and you want to invest in something that's going to generate stable yields over time. Of course, if you want to take a risk, you take like a small portion of your portfolio and play around with meme coins and other or something. That's very risky. But like from an institution's perspective, I think they're no different. They're very much interested in maximizing their yields, and increase capital efficiency. So if they and liquid staking and restaking fit right into that playbook, as there are more use cases for restaking, and EigenLayer is working with dozens of projects to provide crypto economic security for them. And I think they recently announced the Poly Market and UMA. I think that's a great, like the big story, and I'd like to see how it falls out. But going back to your question, institutions will definitely be interested in liquid staking and restaking sectors, and it's not only for the retail.
Right. By the way, real quick, could you quickly explain that the poly market, the Oracle thing with EigenLayer? I'm not familiar with that actually. So could you just like, what is that about?
Okay. So EigenLayer has, I think it's in their tweet, they announced a partnership with Polychain and UMA, the Oracle protocol that Polychain uses to resolve their disputes. And I think I'm not sure because EigenLayer hasn't made an announcement of like what kind of partnership, what are some of the details behind it. But as long as I can imagine, I can only focus on the dispute part. How are they making sure, verify the disputes are correct? So that's where restaking can come in. and incentivize good behaviors, disincentivize, punishes bad behaviors. So I think, yeah, that's as far as I can imagine. But they recently announced a big partnership with Polychain and Luma.
Yeah, that's great. That's great. Um, yeah, I mean, it's like two birds, one stone kind of thing. Because I know prediction markets are obviously like a big deal. Yeah, around the election, and it actually stuck around. Like the trading volumes on poly market are still decently high, like focusing on like sports betting and stuff like that. But yeah, they do have like these contentious markets sometimes that that they get resolved one way or the other, and sometimes people aren't actually happy, right? They're like arguing about like the law and so yeah, and then for restaking, there's obviously like people want to see like the yield is very cool for users, but then maybe like more on the investor side, like buying, the Eigen token, the TIA token, like they want to see like, okay, how is this like being integrated into, like, it's very interesting, but how is it being integrated and being used? Like, where's the demand from like the very established protocols or other companies even for these services. So yeah, I think that's really interesting. On the institutional side, go ahead.
Yeah, just going back to the part where I said Eigenlayer, Polymarket, and Uma, they actually there's actually an article. Yeah, it's rather than a partnership, it's a collaboration to align dispute resolution process with community consensus. So I was right when I dig in, but this article probably came out after I saw the tweet announcement. But yeah, I can share that with you. But I said partnership, but it's actually the collaboration to address the Oracle system that Polychain has. Not the Polychain, sorry, Polymarket has.
Right. Yeah. You got to get those little details correct before Polymarket catches on. Okay. So, but yeah, back to the I thought what you said about the institutional potential adoption of liquid staking, restaking was really interesting. Like, yeah, I think they definitely, there's only so many real things in crypto that they might be interested in. So when it's obviously like Bitcoin, right? Like there's a lot of inflows for Bitcoin, like the ETFs. Not so much for Ethereum yet. Maybe staking helps out there. And then, yeah, I guess like what people are kind of thinking right now is like the actual revenue generating businesses, because now we have those, right? Like a few years ago, that wasn't a thing in crypto. Now they exist. You have protocols actually making like a lot of revenue, and in a way that can actually like be potentially distributed to like token holders or shareholders. And then the other thing is like staking stuff, right? Because maybe they're not like super optimistic on the actual, how do I say it, like business, right, of like that specific chain, but yeah, like they're seeing that the yield coming in, like it's real yield, like it's money. Yeah, so I definitely think that could be like one of the routes that institutions kind of like embed themselves within DeFi and the existing landscape, instead of just like just bringing like their boring like finance stuff on chain, like treasuries or whatever. But yeah, okay, so I think we've touched on a lot of things. Very, really good to get a very deep dive into like restaking, modularity. So what are some things that you're interested in right now in crypto? Like, it doesn't have to be about modularity, restaking. It could be anything. Like, just what are your thoughts on the crypto markets right now, and what's being built?
Yeah, so like I have a lot of interest in crypto, especially like whether it's an AI, BTC staking that the Boblin team is working on, and also the Initia team is trying to solve the multi-chain problem that the Cosmos has not solved. And in terms of like sector, I'm definitely interested in like the real world assets and like I would love to see more capital flowing in the crypto industry in general and how it evolves across multiple different ecosystems and DeFi protocols as well. And yeah, so like not only just the crypto sector, I think the what I really like about the crypto industry is it's not only about development, programming. It's not only about that, right? There's economy, game theory, like a philosophy. Um, like if you're interested in games, you can learn about games. If you're interested in AI, and you can, or also, learn about AI. So it's all about the learning journey and experimentation. And we are still at, um, there are a lot of enthusiasts and crypto like natives who are digging in and digging out and like falling down into the rabbit hole. But now I'm like just um, super focused on what we do at Milky Way, liquid staking and restaking, and how we expand to realize the bigger vision that we are trying to achieve, and how we are bringing values to the ecosystem.
Yeah, always important to tie back to what you're building and returning value to users and the ecosystem. Okay, so yeah, let's tie it back to Milky Way. Like, what are you guys thinking about right now? Like, what opportunities are you guys looking at? Maybe what can users, or maybe not users, people who have never used Milky Way, maybe they're just hearing about it for the first time. Like, what would you want to? What's the impression you'd want to leave with them, and what can people expect from Milky Way in the coming weeks, months?
Yeah, sure. So for those who are not familiar with Milky Way, we have working products. If you go to app.milkyway.zone, you will, find out, what liquid staking, restaking, and it's a very, very simple. Um, you know, um, and there's a lot happening at Milky Way. We've been building this over the past like year since like 2000 at the end of 2023. So expect a lot of updates in the coming weeks and months. So definitely stay tuned for this if you're interested. And also, if you have any questions, feel free to join our community and ask questions. We're very active in responding any sort of questions, and we're happy to receive any constructive feedback as well. So in terms of updates, first of all, our liquid staking support for new chain called Initia. So with the native coin is Init, um, is launching soon. So Initia is expected to go live with their mainnet in the near future, and we are ready to provide our liquid staking support from day one. So if you're an Init holder, you will be able to stake your tokens while keeping them liquid to use across the ecosystem. And we are partnering up with multiple DeFi protocols that are going to be live from day one, when the initial mainnet launches as well. So stay tuned for that. And beyond that, we're also expanding our liquid staking support to other bullish L1s like Babylon. But and yeah, that's the liquid staking part. And the restaking part, we are coordinating with 7 different AVSs right now. So and that's a schedule for I guess Q2. But I think we're aside from that, we are gearing up for TGE before the end of this month possibly, but we're gonna have to make an announcement very soon. I think I've said this like soon, like in other podcasts and spaces, but we're just know that we're very, very actively aligning all the pieces for a successful launch. And then I want that to happen before the end of this month, but it can there might be a slight delay. So, in the beginning of April is, I guess, a realistic timeline here. But expect an official announcement. And we will make an announcement before the end of this month for the TGE. And just know that it's getting close, and we're very excited to share more details soon. So yeah. So TLDR, a lot is in motion, and we're just getting started.
Yeah, definitely a lot on the team's plate. Yes, you get the TGE coming up. I think, yeah, for our listeners, they potentially have like deposited and withdrawn, and maybe they're they'll definitely need a reminder. Or a lot of people have like, yeah, they deposited, across a bunch of protocols that are coming around doing their TGE, and yeah, they've kind of like forgotten about their deposits. So yeah, that's great. Definitely keep in touch, and we'll look to, yeah, I hope TGE goes as planned. And then yeah, it seems like you're also not only expanding to like existing chains to provide liquid staking, but you're like the de facto like day one or day zero provider of liquid staking services for upcoming chains. So yeah, that's obviously pretty pivotal for the protocol. Okay, JB, thank you. Any last closing thoughts?
No, yeah, thank you so much, Daniel. Thanks for having me on this podcast. And then, yeah, it was a great time. I really enjoyed, um, you know, um, being on this podcast and walking, you know, walking through, all the things that we're building at Milky Way.
All right, thank you.